that we tend to forget that stocks are not businesses. Stocks are businesses. So if you understand the business, then you can handle the stock in a much better way. So we must understand the business aspects and not look at stocks as some numbers or markets going up and down. So for investors, it is good to understand the business. So if you understand the business, you will definitely make money. And the other point is, if you understand the business, even if there is one odd bad quarter or two bad quarters, you will still hold on to the stock if you understand the business. So that was the only point here. Okay, so as per me, there are a lot of problems in the global economy with so many banks going down in the US. But the interesting part is that the markets have not collapsed. So that gives some hope, as people were saying here, that it looks like Dow, Nasdaq, and S&P 500 may go up. For India, as I found, the macro and the corporate data has been good. The results have been very good and better than expectation. The macro data for India, the GST numbers, the inflation data, the PMI data, all are good. So it seems that now, if as the prices of commodities are going down, so the profits will improve as the margins will improve. So it is good for corporate India in case because the demand is there. So at least the local demand. So that seems to be good. Now, as I see it, the high-end consumption in India is holding up well, as we saw in Titan's results. A pretty strong outlook. HDFC was good. So and they gave us stellar results with good dividend. Indian Hotels is well positioned and again excellent with so much of events coming up. And all banks are showing great results, good margins, good names, everything is good. But in addition, but if you see, previous results were slightly lackluster because of lower demand in motorcycles, because of probably lower demand. Weak consumer sentiment had hit Havels. So revival of demand in rural markets is a problem, and it was clearly visible in Dabur's fortunes. But if you see the results of other FMCG like Nestle, Britannia have been good, even Tata Consumers. And another airline went down, that is Go Air. So good for things like Indigo and all. And April auto sales data has been mixed. So, Maruti has done well, but others have been slightly subdued. So valuations are high, as we have seen with KEI and Kotak. Like the valuations are now pretty high. So I just show you. Uh, these are the results which have come till now of the Nifty 50 this quarter companies. So if you see, more or less the results are good. And other than Tata Steel and SBI Life, most are showing nearly double digit year on year growth in revenues. And Q and Q can always vary, and margins are also generally stable, so they are not going down now. And now I feel that they should go up from here. And net profit year on year growth has been good. So I think the outlook is should be good from here. And so only problem is the if you see Tata Steel, Ultratech, and the insurance guys and Axis Bank, because of a particular problem of accounting, and Tech Mahindra, that is IT. The only howler this quarter has been Infosys, in my view. Something has. My screen is visible?
Yeah,
Yeah, visible.
Okay, now let's talk about banking sector. a few certain things which I wanted to share regarding the banking sector, some commonly used terms. Uh, Deposits, just for everybody's information, deposits are the liabilities of the bank. As so in the balance sheet, as we discussed last time, they come on the liability sides, and because they have to pay it back, and all lending is the asset of the bank, as a bank is expecting to receive it back, and the difference between all the borrowing and lending is the bank's income. So if the average borrowing cost of the bank is around 4.5%, and average lending cost is 8.5%. So difference, that is around 4%, is the net interest margin. So as we have seen, the net interest margins are going up, and it hit around 5% for Kotak this quarter. So, or you can say another way is the NIMs, or the net interest margins, is the, if you divide the net interest income by average interest earning, all average interest earning assets is your net interest margin. Now, what is net interest income? Is the difference between the income a bank earns from its lending activities and the interest it pays to depositors. So analysts are tracking this net interest income growth very closely, as this is the main business of the bank. There are other bank earns also fees income, and other ways it makes profits, but the main income is from the interest income. That's the difference between lending and borrowing cost. So higher the net interest income, higher the growth, it is better it is. So this is the most important parameter to check. Next is, so how does the bank grows this its profit or net interest income? It is by reducing the cost of liabilities, that is the borrowing cost, and increasing the lending oblique, giving by giving out more loans, or the loans which are given at higher amount of interest. So that's why you find that the loans which are given to corporate or personal loans go at higher rate as compared to the ones which are given with where there is collateral, like home loans. So how to reduce the cost of liabilities? Now there is a thing called CASA ratio. That is the current account and saving account ratio. So higher the CASA ratio indicates a lower cost of funds, because banks do not give any interest on current account deposits, and the interest on saving account is basically very low, 3 to 4%. So higher the number of current accounts, so they have more funds, hence the cost of deposit is lower. So banks always try to improve CASA ratio. Generally, they are in the vicinity between 40 to 50. So the higher it is, better. So 42 CASA ratio 42 means that out of total 100 rupees, bank has got around 42 rupees from current account, and higher the number, it is better. Next parameter to see is the advances growth. That how is the growth in lending taking place? So if the loan advance growth is big, like in this last quarter, mostly it is around 15-20% from banks. So it shows that they're going to earn more income. Now, next issue comes, which we have to see, is the NPA, non-performing assets. So what is a non-performing assets? When a borrower misses 3 consecutive EMIs for 90 days, the outstanding loan you owe to the bank will be termed as an NPA. And when EMIs are paid on time, it's called a standard asset, and when it is not, it is called slippages. So you would have heard this term, that slippages have increased this quarter or decreased this quarter. So this is the slippage. Now, what is gross and net NPA? As we have discussed the NPA already. So gross NPA means all loans that have not been paid for 3 consecutive EMIs. And net NPA is gross NPA minus provisions. Now we'll cover provisions subsequently. So net NPAs are the NPAs for which no provisioning is done by the banks, and hence lower the number, it is better. So the lower the gross NPA and net NPAs, it is better. So bank net NPA of 0.4% means that out of total advances of league loans, only 0.4% of the loans are not provided for. Okay. Now let's see what are provisions. When the bank knows that a particular loan is not likely to be paid back, bank keeps a certain percentage of the loan outstanding. That has been laid down by the RBI to be able to build some reserves in case if the loan actually defaults. So this makes sure that the bank's health remains stable and banks have adequate capital to take care of this defaults. Otherwise, bank will have nothing left with itself to carry on its operations. Now, provision coverage ratio. Now, this is one more ratio which is generally seen in assessing the performance. It is total provision upon gross NPA. So, if you have seen the results, a lot of banks, what they do is in some quarters, they reduce the quantum of provisions and they show very high profits. But you have to see what is the provision coverage ratio. Like a bank with provision coverage ratio of 60 is bad in compared as compared to a bank where the provision coverage ratio is 80%. Now here I just want to say, like in case a loan has been bad and the bank has done some provision, but in case subsequently the it becomes a standard assets and the money comes back, then the banks write back the provisions, so the profits again increase in a particular quarter. Now, the other issue which we have to see is capital adequacy ratio. This is again used to track the bank's health. So it is in simple terms, it is the minimum amount of capital against all the risky lending that bank has done. So it is something like provisioning, but the formula is capital adequacy ratio is tier 1 capital plus tier 2 capital divided by risk weighted assets. Now, the all lending is not with the same risk. So if they give a loan to the government, there is no requirement of capital. But if say a company with higher credit rating is given a loan, then the requirement of capital to be earmarked is lesser as compared in case the bank gives a loan to a company with lesser credit rating like DHFL. So then you will require more capital. So tier 1 cap, if you see the tier 1 capital is the bank's own equity plus the reserves. Tier 2 capitals are like perpetual bonds and other assets which the bank has collected over the period of time. So we will now just see now in the Axis Bank this quarter results. If you see, you can see the net interest income here. This is in billions. So if you see, the net interest income has improved. So if you see, growth is 33% over Q4 22 and over Q3 23, that is last quarter, is 2.5%. And then there is a year-on-year also aspect. Next, as we had discussed, provisions. If you see, the provisions have increased because of the requirement for I think the debt for Citibank. Then we will see the deposits. If you see the deposit growth out here, March 22, June 22, September 22, and December 22, and then March this quarter. So if you see, there is a deposit growth of 15.2% and advances growth is of 19.4%. Credit to deposit ratio. This is basically what is the percentage of advances to deposits. So it shows very clearly that advances are slightly lesser than deposits. Asset quality, if you see the gross NPAs, they have reduced here. If you see here, net NPAs have again reduced over a period of time. So they have been provisioning and reducing it. So gross NPA ratio has been reducing. Net NPA ratio has been going down, and provision coverage ratio has been going up. So which is clearly indicating that they are, well run. And now if you see NIMs, net interest margins here, they have been constantly going up. So if you see from 3.5, it has reached around 4.2. Capital adequacy ratio, you see it is slightly gone down because I think they paid for certain losses of Citibank, but it is still healthy. RBI has mandated that the capital adequacy ratio should be around 9%. And for I think PSU Bank, it should be 12%. So it is still comfortable. Now CET1 ratio is the ratio of total is for tier 1 capital. So this is around 15% and has gone down to 14%. Provision coverage ratio were reduced and credit cost has also gone down. So this was in nutshell about this issue. I'll stop sharing.
Tarun,
Hanji.
If you see, there was a breakout in October 22. Thereafter, the price is just lingering for 6 months. It is just lingering. Why isn't it picking up?
For Axis Bank,
Axis Bank.
I think it went up too much high, and now I think it. If you really see, other than ICICI Bank, all of them are consolidating right now. So everybody was into banks, right? So now I think all the banks were consolidating, and now after this quarter result, only stock which has gone up is the ICICI Bank. Rest are still stuck. I think Axis Bank is stuck between 860 and 900 odd, right?
865 है आज के दिन में.
That's what I'm saying. It is stuck in that
Its
range.
high was 971.
Yeah, that's what I'm saying. So after that bank rally was over, now all of them have been stuck, and then the rally of banks was taken over by HDFC Bank in the last 3 months or so, right? So I think results are okay.
No. Tarun, Bank Nifty was very strong. It just in the last few days it has shown. Otherwise, it's near lifetime high.
Absolutely. So
My question is, when will Axis Bank pick up? What is your reading about it?
I am not sure about it because it is stuck in a range right now. So
Consolidation में है जब तक I also don't know because Bank Nifty is near lifetime high.
yes, Bank Nifty is on lifetime high because of HDFC Bank, and now ICICI Bank is picking up, right? Even if you see SBI, it is also consolidating.
So there will be some more consolidation for bank to pick up.
Yes, and you see also there is another factor. Uh, the the market is thinking that now maybe the NIMs are at the top. So now once the NIMs are at the top, the margins will now start going down. Hence the profits will keep going down. So maybe the market is thinking that we have already seen the peak margins, peak profits.
Also, the world banking is in crisis. US banking is crisis. That's why also it may not pick up.
Yeah, but you see, the US banking is in crisis has nothing to do with the Indian guys. Though Axis Bank, I have given example because they are involved with this amalgamation of Citibank, Citibank credit card business. So they are in that phase of rebuilding now. But as I understand, they have a very good management and pretty transparent management. So I think it's a stock which is buy on dips kind of thing.
Because I was closely monitoring it technically after the breakout. मैं बोला अभी it should pick up, but अभी it is not picking up.
Even if you see ICICI Bank also, right?
ICICI Bank structure is still okay, I feel.
No, it went up to 930, 920, and then it went down to 200 DMA, and then now it has taken off from there. So, because all of them were over-owned, everybody was owning them, right? There was the only solution in life was to buy banks. So once they are over-owned, then you lose money.
Chalo, let's see. Hope banking sector picks up here again.
Okay.